Now, the Federal Reserve is looking very intently on the US labour market for signs that their rate hiking cycle is starting to cool demand. Now, the way the market has been translating US economic data over the last few weeks is that bad economic news is good news for US stocks. Now, the logic for that is that a slowdown in the US economy will mean lower interest rates and easier economic conditions for US companies, so bad news supports stocks for now. You can see that over the course of the month, the S&P 500 is currently down over 1.5%, so we have seen a weak month of August in keeping with a summer slump. On Friday, we have the non-farm payroll print, and markets are expecting a further slowdown in jobs. You can see the headline is expected to drop to 170,000 from the prior reading of 187,000. Now look at the market's minimum expectations, it's 40,000. So a reading below 40,000 for the headline, below 4.3% for the hourly earnings, and a below 34.2 for the average weekly hours is likely to be the bad enough news to expect markets to put less pressure on the Federal Reserve to hike interest rates. So that should be bad news that's potentially good news for stocks. Now, looking at the seasonality of the S&P 500 is really interesting. Around the turn of the month, we see that from the day before to 2 days after the turn of the month, the S&P 500 has an average return of 0.41% rather, with over 60% winning trades over the last 95 years. So, if we do see a big miss in the NFP job headline, then it would not be unreasonable to expect the S&P 500 to gain into Friday's close and follow through with those gains on Monday. Major trade risks. All outlooks have risks, and this is no exception. There's two major risks here. One is that eventually bad news becomes bad news for stocks, and also that prior seasonal patterns, remember, don't necessarily repeat themselves each year. And just because something has happened in the past, there's no guarantee it will happen again in the future. Remember, don't just trade it, season exit.